Even though it's not a price guarantee, the fact that a big bank has thought about the idea of silver being $39 is amazing. Let's talk about it in this video as we look around. Music. Precious metal analysts at the big banks often say what they think the prices of gold and silver will be in the coming year. However, this is a very unusual estimate based on the analysis that came from this source. There are parts of it that make sense, but I'm not sure if I agree with them all. Also, the $39 silver price is a long-term prediction based on why it is thought to be correct. A piece from Jui Mesa that cites Kitco News says that Bank of America recently predicted a new metal plan for 2026. Thought leaders at Bank of America think that gold will still be used as a hedge in 2026. I agree with that. There isn't a real price prediction, but the silver price is definitely turning heads, as it sets new price records that will range from $135 to $39 in the long run. What's going on with some of this is also pretty interesting. Michael Whitmer, the top strategist at Bank of America, says that Hell Silver may continue to surprise the markets in the near future. He says that the price of silver could eventually rise to $135 to $39 as investors put their money back into safe assets like gold and silver. Those are some really close numbers. That's for a reason, what the point of this story is. He also said that the price of silver might soon be higher than the price of gold. In fact, it has already. It has done much better than gold. Also, gold has done very well over the last year because buyers keep putting their money into risky assets to make money, the habit that could finally make silver less valuable. Think about it now. Bitcoin and other cryptocurrencies are examples of assets. Some people are selling those things and buying gold and silver instead. Still, the prices of other metals are also going up. Copper prices have gone up pretty dramatically. Copper's price has been through the roof. It's now back to all-time highs, close to $6 per pound. With the trade war with Venezuela now part of the picture after Maduro was captured, the global supply chain has had to be realigned. Yes, Trump has put in place 50% taxes on copper. After the Supreme Court rules, we'll see if those still stand. As of the time this video was made, that hadn't happened. In October, China put limits on the sale of rare earth minerals, and they just recently said they would do the same for silver. Russia has seen how Trump's government is taking over Venezuela's oil business. So let me show you that on lithium, uranium, and a critical mineral that isn't talked about much. This is the first time I'm showing it to you. China has a lot of power over the West. Today's sponsor, Vanguard Mining, ticker symbol XAUUSD, on the US stock market, has direct exposure to 5 key minerals: copper, gold, lithium, uranium, and for the first time, molybdenum. These minerals are found in the company's diversified portfolio, which includes projects in a number of safe US-friendly countries. Vanguard Mining is the first company I've ever talked about that works in so many different areas and metals. You can trade XAUUSD on US platforms like Interactive Brokers, Schwab, Fidelity, Arrayed, and more. Before I show you Vanguard's projects, which are all in places that are close to the US, like Canada, Paraguay, and Argentina, you need to know that China currently controls these places. The first one I'll show you is lithium, which is this old cell phone. That's where the lithium battery is. You can get a sense of what we mean on this page. The price of lithium dropped 90% and hit its lowest point in June 2025. Since then, it has already doubled. When it comes to refining and processing lithium, China has a tight grip on the market. It owns a large portion of the world's capacity. About 60 to 70% of the world's lithium products are made in China. China has a 3-layer method for its lithium stranglehold: processing control over lithium chemicals, a large battery supply chain, and the power to tighten screws by limiting the export of technology and key processing inputs. The next one is copper. UNTAD says that China buys about 60% of the world's copper ore, and copper that hasn't been refined. On the other hand, China makes more than 45% of the world's processed copper for use. According to a report from the International Copper Study Group, China uses about 58% of the world's refined copper. This shows that China is not only a processor, but also the biggest player in the market, setting prices, investments, and stocks around the world. Then molybdenum is a metal here. This metal isn't something you see very often, but here it is. This is what you're seeing now. China has a very tight grip on this metal. They control the main production and use export restrictions to limit the amount that is available around the world. At the same time, they use a lot of it in their own steel industry. There is clear leadership in production. China is responsible for 42 to 45% of the world's molybdenum output. For reasons of national security, China put strict limits on the sale of molybdenum powders and related alloys in 2025. Because of these steps, China's exports of Malay goods to the West dropped by a scary 95% in just 1 year. The gold sites are in the Kamloops mining area in British Columbia. The Brussels Creek project is an exploration project for gold, copper, and palladium. And for uranium, being able to get energy on your own is important for national security. As the U.S. tries to separate itself from weak foreign supply chains, the mission is clear. Get uranium from friendly countries in your own country at all costs. Companies like Amazon, Google, and Microsoft are now getting their long-term power straight from nuclear reactors instead of from traditional utilities. They need carbon-free baseload power that is on all the time. That kind of source is the only one that fits. Nuke fuel. This is why Vanguard Mining has been found. They are in charge of more than 90,000 hectares in the Paraná Basin in Paraguay, strategically placed next to the world-class Uranium Energy Corp's project. Then there is the lithium project. Argentine projects are important westward-friendly options to major suppliers. Vanguard Mining did a great thing when it got back its entire stake in the Poquitos 1 lithium solar project in Argentina for free. Their high-potential brine asset makes Vanguard Mining's business stronger at a time when lithium prices are rising again, and the number of mergers and acquisitions in the sector has surpassed $8 billion. Poquitos 1 gives investors direct access to Argentina's world-class salt flats and the chance to make money through research in a country that is set to produce a lot of oil. It's not a market metal, but molybdenum is. It doesn't make the news, but it's important. It makes steel stronger, allows high-temperature alloys to work, and is essential for infrastructure in pipelines, military systems, aerospace, and energy. Vanguard is in a unique situation because it mines molybdenum along with gold, uranium, lithium, and copper. You should learn about this multi-minerals company on your own and know the risks and opportunities that are there. Now let's look at why Bank of America is calling for $39 in silver. Whitmer said that investors who are willing to take on more risk in exchange for more upside may be more interested in silver. He also pointed out that the current gold to silver ratio of about 59 shows that silver could still do better than gold. He said that the all-time low ratio of 32 in 2011 meant that the price of silver would reach a high of $135 based on that ratio, while the price of gold was more steady. But that doesn't quite fit with where we are now, even though it makes some sense. It's still a pretty good chance. You have more room to move. And what happened in 2011 is more like what happened in 1980, when the low point was $14. This number points to a silver price of $39 an ounce. Because of this, we can see where and how silver could get that high. That is definitely pretty interesting. I will say, though, that even with this bull run, it's very unlikely that the ratio will drop that much. I believe it will end earlier. But if you use the reasoning and logic that come from being that high, it is possible to get there. But it's not at all like it was in 1980. The only thing that might change is that more investors might buy a lot of silver. And that is a chance if, as I said in a previous video, 10 or 11 David Batemans come in and buy a lot of silver. This could happen along with the deficit we've been seeing for 6 years now. That's a good idea. Since they know about Bank of America, they are also high on gold. Most likely, it means they want metal more. Based on their reasoning and what I said in my video about predicting the silver price at the beginning of this year, I think we may see well over $100. And yes, it is very interesting. This is probably one of the most shocking things I've ever seen from an expert using the gold to silver ratio to explain such a high price. Is it dangerous? I'm not going that far. I mean, I do think that 1980 is such a unique year. Our chances of seeing that are very low, unless the situation I stated earlier comes true. We'll see. But please tell me what you think about this movie and this call from Bank of America about silver. I hope this movie was interesting, helpful, and educational for you. Thank you so much for watching, and please rate, share, review, and subscribe. 6